Morning, everyone, or good afternoon even. Just waiting for a few more people to just log in. Bear with us. Okay, great. I think we'll kick off. So good afternoon, everybody, or good morning, depending where you are in the world. A very warm welcome to a special edition of the Fintech Club, where we'll be deep diving into fintech trends of the future. My name is Karen Sandu. I'm the head of Financial Business Service Technology at London Partners. Before we kick off today, I just want to mention a couple of tips and housekeeping points so you can get the most out of the event. I'm sure, though, that you're quite used to it. But can you add your name and company if possible? Please leave your video on if you're comfortable. Please put yourself on mute unless asked to speak. Please do put comments or any questions you have for our panelists in the chat. And if you have any technical issues, please put this in the chat also. One of our team can pick this up. And finally, we are recording this session. So for those of you who are here who are unfamiliar with London Partners, we are the business growth and destination agency for London. Our foreign direct investment team attract international investment into London, supporting international businesses from around the world as they look to set up and grow in London. So since 2011, we've supported over 2,100 international companies to set up or expand here. We also run 2 trade programs which support London-based businesses to scale and internationalize. The first is our business growth program, which has supported more than 1,300 companies, helping them to reach their growth and scale ambitions, with over 800 founders completing our program, more than 360 female founders and 280 underrepresented founders supported. They were also recently voted as one of the top 5 hottest accelerators in Europe. And our second program, which is a fantastic program, which is the Mayor's International Business Program, that have supported over 1,000 London-based scale-ups to help them grow their business internationally. And some of those clients that they supported are Revolut, for example, among many others. If any of these programs are of interest, then our team at London Partners, together with our network of partners, are here to offer you a warm welcome. The services that we provide are really bespoke in order to help you navigate all the opportunities. So this week is a really exciting and very busy week for everyone in FinTech in London, as FinTech Week London is taking place all week. We're very proud of our fintech sector and its considerable growth over the last 10 to 11 years. Some fantastic investment figures have come out this week, with London ranking second globally for fintech VC investment so far this year, with $5.3 billion invested in the first half of 2021, which is phenomenal. And from 2015 to 2021, the number of fintech startup and scale-up companies headquartered in London have actually increased by 64%. So there are currently 3,018 fintech HQs in London. That's the highest amount globally. If you haven't already registered for Fintech Week London, it's not too late. There's still a couple more days left. And you to view their excellent content, and one of our team can put the details in the chat if you want to sign up. There's a really strong community here of fintech companies. I'm delighted that you'll be hearing from some of them today. And we at London Partners have just launched our report on the fintech trends of the future, which if you haven't already viewed, one of the team will put this in chat for you to access as well. And we're delighted to have a fantastic lineup of speakers today, deep diving into the 3 main subsectors covered on our report: digital payments and e-commerce, open banking, financial inclusion, and green finance. And now I'm thrilled to kind of kick off our fireside chat and introduce you to our first 2 speakers, London Partners Acting CEO Alan Simpson and Ron Kalifa OBE and Chairman of Network International. Over to you, Alan and Ron.
Well, thank you very much.
I think you might be on mute.
That better? Yeah. Well, thank you very much, Karen, and apologies everyone there. I somehow managed to mute myself, the marvel of working remotely. And thank you to Ron. I guess a lot of people on the line will know Ron Kalifa personally, either through his long career in banking and payments or through the FinTech Review, which in keeping with its topic, I felt was a very open collegiate exercise, and certainly L&P are very grateful to have had the opportunity to contribute to it. Ron is, I suppose you won't mind me saying, perhaps a sort of a living example of the change the City of London has gone through in the last few years. A career banker at one of the UK's oldest institutions before moving into financial technology as it grew into the force we see today. And of course, you've served, Ron, on the board of organisations including TfL and the Bank of England. But today we are here to talk about the review into fintech. And I have to say I've been reading these documents for a long time, and it's one of the clearest I've seen, not least because it does make actual recommendations and frame choices for the government to make. So I thought, Ron, we could talk about some of those choices. And you suggest in your review, don't you, 5 areas for action: policy and reg, skills, investment, international action, and national connectivity. If you had to order them, if you had to choose a lever to pull first, what would you go for?
Well, firstly, delighted to be here. Thanks for the opportunity and such a warm introduction as well. I guess let me start by saying that I really dislike the phrase fintech. I think it encourages us to think about fintech as a separate activity and a separate to the finance sector. It's in my view that fintech shouldn't be considered as something that's niche or a subsector, but something that's permanently changing the way we do finance. Distributed finance, wider availability, the consumer in the driving seat, a much more competitive market. That's where we're going. And that's the transformative nature of technology that I believe in. It's not just startups in Shoreditch or London, but rather a phenomenon that's changing completely the provision and the consumption of financial services, whether you're a regulator, a legislator, an investor, or an incumbent. This is the version of fintech that I think needs to be understood. And it was actually through this lens that we undertook the review. And the review puts forward a strategy and a delivery model that'll allow the UK to truly grasp this sort of transformative potential of fintech. As you say, this strategy was built around 5 lenses, and in no particular order: policy, skills, investment, international competitiveness, national connectivity. But coming back to your question, I guess, it's really not about picking winners. The strategy and recommendations we publish will only work if they are taken holistically and implemented as a package. What the review is trying to do is to help us achieve a series of things. Firstly, to get scale in terms of fintech and to drive adoption. In the UK, we represent 10% of the global market share of fintech. And there's no doubt that we've got an exceptionally strong base in the sector globally. And I think we've built excellent cohorts of fintech startups and significant expertise in technology verticals, whether it's AI. And if you think about AI, in fact, the UK ranks 3rd globally for investment into emerging technologies, such as robotics, AI, and the Internet of Things. And we're 2nd for fintech. So the challenge, I think, is how do we support UK fintech to scale up in a way that allows us to achieve a fully tech-enabled financial services sector? And underpinning each of those 5 areas was a focus on how to think about and how to address this challenge in a way that is, if you like, firm agnostic. In other words, we wanted to draw on the strengths of our startup community and the incumbent financial institutions to deliver outcomes that will service a domestic customer base, but also, frankly, bolster our global ambitions and our international competitiveness. So I'm not really keen to pick favorites because I don't think it would be an appropriate way to do it, but I think all of them took a lot of work, and many of the people who are listening to this and have contributed enormously to the volume of inputs that we've had. But let me highlight a few of the recommendations that speak, I think, to the opportunity directly. The first one is Scalebox. In the UK, we've set the benchmark for policy-led innovation. 50 countries now, 50 countries, have replicated the FCA's regulatory sandbox. We were the first country globally, 2017, to launch a sandbox. And now 50 have copied it broadly. And this recommendation was about building on the good work to provide a suite of enhanced support for scaling businesses. We reflected on the massive feedback from many, many startups who felt really exposed to the full gambit of FCA regulation when they moved out of the sandbox. And I'm delighted that the FCA is now responding to this through the fintech nursery. They're providing extra support for newly licensed firms. They're also establishing a digital sandbox in partnership with the City of London Corporation. This is think about it as a digital testing environment that'll enable innovators to develop and validate their technology products through access to synthetic data sets and targeted ecosystem support. So that should be an accelerator for faster adoption. Another recommendation was to establish the Centre for Finance, Innovation and Technology. I haven't called it anything to do with fintech. It's Centre for Finance, Innovation and Technology, CFIT. And we wanted to look at how to bring private providers, large and small, new and established, together with regulators, investors, and consumer groups to create solutions, partnerships, products that could improve the market for end users across a number of prospective areas, SME lending, financial inclusion, digital ID. The USP of CFIT will be to build these coalitions of actors across the value chain to solve what essentially is market-wide challenges, which I hope will create better conditions for individual market actors to operate in. And the third one, maybe I should just quickly highlight, is a 1 billion fintech growth fund. The UK is the top destination in Europe for fintech investment. This year, the UK fintech has raised about $5.7 billion, which is already more than last year's number of $4.5 billion. So within the first 6 months, we've got to that number already. And despite all of the stuff that's going on, UK fintech is facing a £2 billion annual growth capital funding gap. It's not a new issue. There's a Series B plus funding gap in the UK, and many promising and fast-growing companies tend to struggle to get to finance, to access the finance they need to achieve their potential. We don't have a problem in terms of startups. It tends to be in the sort of scale-up place. So Series B plus is where the problems tend to be. And although we're ranking in the world for starting a business, we only rank 13th when it comes to scaling them. So when you look at domestic investment into Series C and mega rounds, the percentage of international sources of investment, frankly, far outweighs the domestic capital. So over the last couple of years, only 19% of investment came from domestic sources for deal sizes between about 100 million to 250 million euros. For anything above 250 million, the percentage of domestic capital reduced even further to only 8%. So that's why the reviews propose the creation of a 1 billion growth fund. The idea is to make it market-led and ideally financed by domestic institutional capital. It would create a kind of a much-needed channel for private domestic capital into growth capital opportunities, including the potential to unlock the biggest challenge we've got, which is unlocking DC pension money. And you've got to remember, there's £6 trillion. £6 trillion is locked up in UK private pension schemes alone. So a rather long answer, Alan, forgive me for a relatively simple question, but I'm not going to rank it, but it kind of gives you a sense of just the opportunity that's right here in front of us.
Yeah, no, fascinating. And in a sense, you've answered the second question I was going to ask, which is about government action. But there's something I want to stick on the finance point if I can. Just before I do, if anybody has any questions that they want to put to Ron in the chat, please do, and we'll talk about those too. But this point about finance is really interesting, isn't it? Because the part of your review, and actually the review at a similar time by Lord Hill, which was most controversial. In fact, the only part which had controversy was about investor protection, and your proposals about making it easier and more and perhaps less expensive to issue capital at a later stage than you're talking about now, whether that's through changing the voting structure of shares, either in perpetuity or for the first period of listing. Do you have a sense of how we strike the right balance between enough investor protections that those institutional investors feel safe on the market versus making sure the cost of capital and therefore kind of the funding ladder is appropriate for an issuer? It's not an easy balance, is it?
No, it's not. But look, bluntly, every other market around the world is doing it. So I don't want to be glib about it, but in the UK last year we attracted about $4.5 billion in VC investment, which was more than the next 4 European countries combined, and ranked second globally, only behind the States. Already, as I said, this year we've got 5.7 billion that's been raised. So capital is strong, but what we lack is an environment that supports firms right the way through their scaling journey from startup to IPO. Many companies just get so far, then for one reason or another, they'll go to the States. I was involved in one of them called WorldPay, and we listed here in London, did a fantastic listing. It went super well, but then scale was critical. And at that point, we had to combine with an entity in the States. So these things do happen, and market dynamics are driving that. But what we have got is an incredible pipeline of fintech and tech companies who are scaling rapidly. And I think we've got to respond according to sort of provide options for growth and patient capital in the private and public markets. Despite the strengths of the London Stock Exchange, and there is a strength there. It's a globally recognized exchange. We have seen a decline in the number of listed companies across its markets by 45% since 1997. And over the last 5 years, the US accounted for 53% of fintech IPO listings. We here in the UK had 7%. So it's for these reasons that we proposed a series of changes to our listing regime to improve the route from private to public capital, as well as increasing flexibility via golden share or dual class share structures. We also have suggested introducing changes to the minimum free float requirements. And I think these changes will put the UK on a much more level playing field with other markets. So if you look at other markets, for example, dual class share structures are available on every major exchange, whether it's New York Stock Exchange, NASDAQ, Euronext, Deutsche Börse, Hong Kong, and Singapore. But when it comes to reducing the minimum free float, whilst it might be controversial to some, the recommendation, and I want to stress this, is that it will be for a limited time only post-IPO. So there's not something that goes on forever. And currently a new issuer in the UK must ensure that at least 25% of their shares are at all times in the public's hands. This is a much higher threshold than what's demanded elsewhere. And it's, I think, a barrier to listing in London. And reducing this requirement would allow founders to gradually cede control of their company through a phased 5-year approach, to say that. And I think it's important that for founders who want to continue to participate in their company's post-IPO growth in value. And at present, there's about a third of privately funded UK fintechs that expect to IPO within the next 5 years, and will therefore right now be thinking about their listing destination. So we have to, I think, put a marker down and start encouraging these businesses, because by encouraging them to grow, start up here, scale up here, IPO here, we're talking about not just the fun of setting a business up and getting it going, but also they create jobs. They create, untold jobs up and down the country. So this is why I think it's absolutely key that we do it. I guess the final point for me is that we've got to think about, what does it mean for the UK economy, particularly given the significant challenges that we've had over the last 18 months. And it's something like fintech's direct contribution to the UK economy was about £5.3 billion last year. It's estimated that in 2030, UK GVA contribution, supported by the fintech sector, will increase to 24 billion, from 5 billion to 24 billion. That opportunity is really clear. And I think it's really important that the FCA have launched a consultation on these reforms. And if adopted, they will ensure that the UK can remain a really competitive and dynamic market.
Well, thank you for that. I want to bring in some questions from our guests, but just very quickly, if I can pull you back something you said, you talked about your experience of having to take a company to the US and in effect to merge. People have often talked about Europe as being a market that wants to grow to be bought, and in the US people want to grow to be huge. Is that a culture that's changing?
I'd like to say yes. I don't think the evidence is there yet, but I think some of the recommendations under review and others. This is a journey. We're not going to get there in a short period of time. This piece of work was the brainchild of the sort of City of London Corporation, who thought about the need for expansion and growth and job creation, not just in the sort of confines of London, but this is a regional play. This is a global play in many ways for us. So I don't think that we have been successful yet in growing that many global champions. The task for us to do that, look, we kind of lost the war, if you like, as it relates to technology companies. The big tech companies are now in the States, as you rightly say. But why wouldn't we take the great strengths and legacy that we've got in terms of financial services and the technology sector that's growing rapidly in the UK, bring that fusion together and use fintech as the next wave of growth for the UK? And that's what I hope this opportunity presents itself. So, the only judgment we can make on it is what happens in 5 years, 10 years time. And that's the only time we'll look back and say, did we get it right? But I think the recommendations hopefully get us there.
Okay, and we've got some time for a couple of questions from the audience. So Anton Cool asks, would it help to increase investment to underrepresented founders, especially female founders, if government introduced incentives to VCs or other tax incentives?
Yeah, look, the simple answer has got to be a yes, right? But I think one of the things I'm very conscious of is that I think there's a danger of asking government to help at the moment. They've got quite a lot on their hands. And one of the ways that I tried to do that from a review point of view was always to make sure that we didn't ask too much of government. We asked them to convene, we asked them to kind of collaborate, etc. But the majority of the asks were in the private sector. But Anton, I think the point you make is a slightly broader one in terms of there is a deficiency in terms of female founders and being encouraged. Part of it is just that we've got to start pushing it and people have got to start talking about the opportunities. There are some fantastic businesses up and down the country who I meet and talk to regularly and did as part of the review. And I think we've just got to make sure that we talk about them, we celebrate their successes, and they build sort of, if you like, the momentum around them, because they will be the role models for the next wave of opportunities. So it's very easy to say yes to that, but I think how we do it and how government can help is a challenging question, because frankly, I can imagine the ask going to them. The answer will be, well, what about the hospitality sector? What about another sector? So it's actually very difficult to kind of prioritize one versus the other.
And Henry White asked a question, which I suppose pulls us back to the content of the review really directly. To what extent do you believe technical skills and core financial education are essential to the UK fintech's continued dominance?
Yeah, look, skills and talent was a very, very important part of the review, because it's an area that we are lacking in many ways. In 2020, across the fintech sector, 43% of job adverts from UK fintech scale-ups were looking for data skills, 44% were looking for technology skills, and 35% were looking for business skills. But we are lagging behind the competition in the UK for this very specialized talent. We rank something like 24th globally when it comes to data proficiency, 23rd for technology, and 19th for business. So these deficiencies are a challenge for the sector, particularly given the global competition that's sort of exists out there. Several of the recommendations are about retraining and upskilling adults. So that's one of the things that we're trying to find a way to do. We've made great progress in terms of some of those things, and we've got more news to come of that in terms of certain universities who have now started to put courses online and are going to pump that out and collaborate with some of the larger fintechs as well. So I think, Henry, there's a big opportunity to get that right, but more to come in time.
And perhaps the last question, but a more macro one. We do have this tendency, don't we? This is from Deepak. We do have this tendency, don't we, to compare the US to the UK, but actually in fintech, perhaps more than anything else, it's Asia where those giant super finance apps are. How does the UK leave behind years of legacy to keep the incumbents happy? How do we actually compete with Asia?
You know, I can remember the first time I ever went to Asia on a business trip, and I was absolutely astounded how progressive and how far ahead that they were, if I can put it that way. But I was in a business called WorldPay at that time, and they had some great payment organizations up and down the country, and you'll know them. They've been sponsoring the football recently. But the reality is that you've just got to keep focused on what you're doing. You know, we have got the potential in the UK to build global giants. We absolutely do. WorldPay in its time was that. It's now part of FIS, which is part of a global giant. So I don't fear any region in particular. I think we should think about it as the opportunity that exists. But the key point is that whether it's Australia, whether it's China, whether it's India, whether it's France, whether it's Singapore, they've all got ambitions in the space of wanting to do more and wanting to get on with some of these sectors. But we've just got to kind of make sure that we focus, we drive the activity, we drive the recommendations that we've all collectively signed up to now, and frankly, make UK the strongest place to do business.
Does it feel like, as much as anything, it's to do with how early adopter the customer base is? Because if you look at, you know, I was at Barclays for years, and you know, they formerly owned ABSA, the big African bank, and I saw firsthand how, in the same way that, you know, in Europe we have debt rather than equity because we had banks. That's where banks set up. In Africa, there is this mobile banking first approach, for example. Are we basically seeing the adoption behaviors of customers drive supply?
Yeah, great question. Look, I think, you know, take Africa as if you take the region of Africa and the Middle East, you know, there's 1.5 billion people there, twice the size, 4 times the size of US and Europe. Everything is basically mobile led. 86% of transactions there are cash transactions. 20% of the population have got a debit card, 3% have got a credit card. I'm involved in a business which is out there, which is principally trying to think about how do you build capability on a different set of rails versus the ones you built in Europe or the States or Asia. So I do think that behavioral trends drive market activity, and you've got to be alive to that. But I think, you know, that's a great example of where it's going. And Asia's been driven in a particular way.
Yeah,
I think increasingly it's becoming much more westernized, strangely enough, in terms of the adoption curve that it's going for as well. The question is, where's the pull and the push going to be? How much of the US, how much of Europe is going to get influenced by the Asian culture and vice versa?
Well, that feels like a really solid note to end on. I'm taking a lot from this conversation, Ron, but I think particularly your sense that helping businesses to scale, the role of public policy in making that possible, and the force of having an adopter confident consumer base is so key to a fintech market being vibrant. Look, thank you for your time today, but also in preparing the review, which I know we all really welcomed. And I'll hand back to Karen for the rest of the session.
Thank you, Ron and Alan. Fascinating and completely insightful discussion on the recommendations, and look forward to hearing more as they come to fruition. I will now, though, have to rethink. I'll think of you, Ron, every time I say the word fintech. I'm now delighted to hand over to Catherine McGuinness, Chair of the City of London Corporation, to introduce our next panel on financial inclusion and open banking. Over to you, Catherine.
Great, thank you very much, Karen, and it's great to be with everyone this afternoon. Thank you very much, or this morning, whatever time it is with you. Thank you very much to London and Partners for inviting me, and also congratulations to FinTech Week London for creating a great agenda this week to showcase UK innovation. It's always good to hear Ron talk about those recommendations from his report, and I think they set a great framework which will really underpin opportunity for the future. So now what we're going to do is focus on financial inclusion and open banking. An inclusive financial system being of great importance to the UK, with open banking a good example of where regulation can support greater inclusion and competition within the financial sector. And of course, the pandemic actually has reminded us how tech can really provide some solutions and increase inclusion. I don't have very long. It's going to be a question of speed questioning, I think. So I'm going to go straight to our great pair of panelists. I'm really pleased to be welcoming Iana Dimitrova, Chief Executive of OpenPayd, which is a digital banking as a service provider for corporate customers who trade cross-border. And also Iana is a lawyer by background and has spent the last 10 years in payment. And I'd like to welcome Janine Hirt, who is CEO at Innovate Finance. Innovate Finance is the UK industry body for fintech, which we know well from the City of London Corporation. We work very closely with them, not least on areas such as the recent, such as Ron's review recently. Look, it's great to have you both here with me. I'm going to start by asking you, Iana, the first question. Clearly, open banking has been a positive force in opening up opportunities for fintechs. When we look ahead at what's next, how do you see open finance impacting the UK and London finance ecosystems?
Hi, Catherine. First of all, thank you very much to yourself and to London and Partners for having me and for having OpenPayd today. I think, first of all, I just wanted to say a few words on the back of the discussion that we just heard and what we just heard from Mr. Kalifa. I think it is really important to put the emphasis on fintech and really to say that fintech is not an industry that is sitting there alongside others in isolation. I think the way that we should all think about fintech is really being fundamental for the growth and the recovery of the economy. So I guess the reason why I'm emphasizing on this is because fintech and innovation in fintech and open finance as part of it is really critical to the economical growth and to the recovery of the economy, especially now in these times after the last 18 months. I think London obviously has always been at the forefront of innovation, both in terms of regulatory foresight as well as product innovation. I think the UK FCA took an extremely practical approach already with the implementation of PSD2 and was leading the open banking initiatives. Of course, the sandbox environment has been a great tool as we now see adopted by many other countries that are trying to attract business. So I think from that perspective, really, we have a great environment for the future development, and I think we probably ought to pause and look at the demand that is coming from customers. This is really what we experience at the front line, that the demand for more and more open finance solutions, for more and more embedded and fully integrated payment solutions is coming straight from our customers. What's the reason for that? The reason is that all customers, businesses and consumers equally are looking for a far more cost efficient and I guess instant way of moving funds as well as data cross borders. So I guess from the standpoint of a business that is scaling up, that is growing at this point, I can only say that I hope that London stays at the forefront of that regulatory innovation that allows businesses to develop those new products and services that our customers are now expecting.
Yeah, thank you very much, Anna. And I think you make a really important point about fintech not being a sort of niche side area, but being absolutely mainstream. And it's also, of course, not just a London area, it's a strength across the UK with the clusters that we have. And I wonder if I can bring you in, Janine, if you have any comments on this particular question.
Absolutely. And also thank you so much, Catherine, and thank you, London and Partners, as well for having us here. I mean, I would very much echo what Iana said and essentially add that we know the UK is very much a pioneer in open banking and in open finance, and that has only served to cement our global leadership as a fintech hub more broadly. I think there's two real reasons and two areas around open finance that will contribute to the continued leadership of the UK. One of those is specifically around consumer adoption, which we know has only grown in the wake of COVID as well. So we've moved from around 71% consumer adoption of fintech to 76% consumer adoption, which is one of the absolute highest averages in the world. And if you look at open banking specifically, the OBE reported that over 3 million UK consumers were using open banking enabled products by the beginning of this year. And Yapily predicts that by 2022, we'll see more than 2/3 of all adults using these products. So there's a huge market here in the UK. And I think the other second angle that we are incredibly strong at is around the partnerships piece. There was a recent report that was put out by Tink, which estimated that 72% of UK financial executives said their interest in open banking only increased during the COVID period. So for fintechs, for startups to scale ups to come here and not only have an outstanding consumer base, but also have the opportunity to partner with some of these large incumbent firms as well, this is only serving to really strengthen our leadership position.
Thank you very much. And one question that has been sent in advance is around embedded finance. And I'm just wondering, perhaps I could start with you this time, actually, Janine, thinking about the progress that's been made since the advent of open banking. How has it allowed for embedded finance to move forward? Any thoughts from you?
It's such a great question, Catherine. I think embedded finance is very much the idea that the banking isn't necessarily with the traditional bank. It's actually where your customers are. It's where the activity or the flow is actually occurring. And so in many ways, open finance is almost the realization of this. And we're seeing cases and use cases happen where, for example, neobanks are partnering with third parties so that they can provide, offer mortgages or provide cheaper access to gas and electricity. We're also seeing different models that, for example, are catering to, say, charities to make sure that they have an overall review of all of the donations that we're receiving. So there are so many different areas where we're receiving third-party providers and different companies utilizing open banking to really expand out the access to financial services more broadly.
And Iana, this is very much in your space, isn't it? And in the services that you're offering. What would you say on the subject of it?
Yeah, absolutely, Catherine. I think what's absolutely fascinating is that 18 months ago, people weren't really talking about embedded finance, nor were they talking about API banking. Whereas today, and I can say that from a practical perspective, talking to customers every day, we get more and more often asked about API banking. So we would get CEOs reach out to us and say, we are today using a tier 1 bank, a tier 1 UK bank. We're very happy with the basic level of service, and we are very much aware that the cost cannot really go any further down than that. However, for our business to grow through the various digital delivery channels that we're now developing, that our consumers are asking us to put forward, we now require API banking. So that is really the massive shift that we've seen in the last 18 months. And I guess on top of that, this is really now the probably the alternative that businesses were looking for so many years, moving away from the traditional card schemes and rails ways of moving money. Because if you think about the benefits of open banking, in particular around the payment initiation, there is a clear benefit for both businesses and consumers in terms of cost, in terms of security, and in terms of time for settlement. So we actually now in the last 12 months see the trend, the demand coming from businesses for payment initiation, and the payment initiation service is a mechanism to replace the traditional debit and credit card channels. And then I guess on top of that, what we see more and more is for businesses to understand how can we use the account information services to actually understand the consumer behavior better and therefore target our offering in a better way. So I think we have seen an absolutely fascinating development over the last 18 months, and this is really the start of embedded finance, because I believe that more and more traditional businesses that are not financial services businesses will move into that space and try to monetize their consumer base through open finance, through embedded and integrated financial services.
Thank you. And just thinking a little bit about the regulatory aspect to all this, with the UK having left the EU, I think there's a conversation to be had around where we are on regulatory standards and on aligning regulatory standards. And how do you think we will see the direction heading? Will the evolution of open banking UK versus European PSD2 APIs, how will that head in the long run? Do you think we'll develop in different directions, or will we align? Any thoughts on that?
I certainly hope that politics will not come in the way of business and consumer experience, because there is no business or consumer experience logic behind the two regulatory regimes diverging. That I can say that from a practical perspective, from the perspective of a scaling business. I think Brexit and the lack of, I guess, alignment when it comes to financial services and passporting was a huge distraction. It was a huge barrier for any business that was just starting up and trying to grow its customer base. Going back to what Mr. Kalifa said earlier about the UK's effort to attract businesses that want to start up, to scale and to grow, I think that was a major barrier, a major setback, because a lot of resources had to be diverted to set up the contingency plans. I think it will be terribly unfortunate if we now see this in the RTGS standards, if we now see this in open banking. And the reason why I'm saying this is, again, based purely on the demand that comes from customers. And that demand is very simple. We need a fully integrated single connection access to payments and banking services across border. Why? Because we as a digital business need to trade on a cross-border basis seamlessly if we want to grow. So if the aspiration is really to foster an environment where businesses cannot just start up and scale, but really grow to these payments and banking and embedded finance giants to compete with the US, there has to be a regulatory alignment between the UK and what happens in Europe, because that's the expectation of customers ultimately.
Yeah, thank you. Janine, anything you want to come in on there?
Yes, I would. I mean, I agree in terms of the regulatory alignment. The one thing I would probably say in terms of maybe bringing in a positive note is that I think if you look at open banking adoption between Europe, which is including the UK, and the US, in the US, it's been very much market driven. And in Europe and the UK, it's been very much regulatory driven. And so the fact that the UK has consistently been ahead in terms of open banking and in other regulatory initiatives means that there's actually a very, very strong opportunity for us now to continue with this proactiveness and make sure that we maintain our position and don't rest on our laurels, but keep that leadership in fintech. And I also think it's important to look at the number of fintechs that have decided, so fintechs from around the world that have decided to choose the UK, be that London or other cities, as their hub and as their home, and have stayed here beyond Brexit, or even moved here after Brexit, or after at least the referendum. So look at the case of, look at Tink, look at Plaid, look at Klarna, look at a number of other fintechs that have come here. So just in terms of the strength, there is some opportunity there as well.
Great, thank you very much. And the title of our session is, of course, around financial inclusion. And is there anything that either of you would like to highlight where you've seen some initiatives over the pandemic period that you would really like to, call out or showcase for increasing inclusion during this period? Iana, you're reaching for your mouse, I think. Or maybe not.
I think you might just need to repeat the question, Catherine, because you just cut out a little bit there.
Financial inclusion. Is there anything in particular that you've seen over this pandemic period that you'd like to pull out? I mean, we've had a question in advance. I think, how can UK or London wealth tech and invest tech help create financial inclusion for the financially underserved?
Absolutely. I think we're really going back to the point made in the beginning of the session around fintech and fintech financial services being absolutely central to the growth, the recovery of the economy. I think what is extremely important, what has been extremely important over the last 18 months is the drive for more and more open access to financial services. We saw the role that several fintechs and technology companies played in the initial, I guess, access to government support and government help. I think that these are certainly initiatives that we have to call out. And then from there onwards, it's really that continuous fostering of a regulatory and I guess talent environment and education, going back to the point around education and fostering and attracting that talent in London to allow the continuous innovation.
Yeah, and I see Paul has put the question much better than me in the chat. So Janine, if you want to come in on that, really, yes. How is this helping ordinary people, particularly during the pandemic period?
Well, I think in terms of open banking and in terms of some solutions, I mean, there are a few that have been or are being created, which the pandemic will very much likely cause even greater reliance on. But for example, if you look at Credit Kudos, which is really enabling individuals who may not have a credit background to get access to services and provide that with that credit background, or also the likes of companies such as WageStream, which are enabling employers to get access to their already earned wages throughout the month, which is really making quite a significant difference. I think if you step out into the wider conversation on fintech, so maybe slightly away from the open banking piece, but and Iana referenced this as well, but the role that alternative lenders played during the COVID period has just been phenomenal in terms of distributing C-bills and B-bills. We know Funding Circle, for example, distributed more than 25% of all of the C-bills loans. So they very much were filling a gap and championing us as we survived and made it through to the other side of COVID as well.
And Iana, Janine has told us a couple of initiatives that particularly attracted her interest. Are there any particular up-and-coming London fintechs on your radar that you would like to just highlight at the moment? Any new initiatives that you're spotting?
I think from my perspective, it's mostly around the, I guess, initiatives and the variations that is coming out of open banking, in particular around not so much the payment initiation side of things, but the account information and aggregation, and how, I guess, those services and the ability for some of those service providers to go back into the history of transacting and the spending history of customers and aggregate that data and package that data and then offer to businesses for further implementation. I think from my perspective, it's really those open banking service providers and the variations around the account information and client behavior and client profiling that is really something to follow in the coming years.
Great, thank you very much. I think we're actually absolutely on time. So sorry, Janine, if there was anything you wanted to add, but I'm afraid I'm going to have to hand over to Karen and you'll need to pop it in the chat. But thanks for being a great panel. Back to you, Karen.
Thank you, Catherine. Thank you all so much for a fantastic discussion, some great observations on open banking, financial inclusion and the start of embedded finance. Thank you all so much. I'm now delighted to hand over to Priya Guha, venture partner at Marion Ventures, to introduce our next panel on digital payments and e-commerce. Over to you, Priya.
Thank you so much, Karen, and thank you to the team at London Partners for bringing us all together, for which I hope will be a really interesting discussion on the theme of the future, really, of digital payments and e-commerce. And you have the panel in front of us, but let me bring them in and introduce them as I do. So we have Kaushalya Somasundaram. She is the head of UK Payments, Partnerships and Industry Relations at Square. Kaushalya oversees the industry and regulatory relationships with commercial oversight of the UK business at Square, and previously served as managing director of Fintech Partnerships at HSBC, and is also an advisory board member of PayU and a member of the World Trade Board. Welcome, Kaushalya. We also have Moshe Winegarten, who's the SVP Sales for Checkout. Checkout, if you haven't come across them before, is the leading cloud-based payment solution provider and the UK's largest fintech business. Moshe is a payments expert with 15 years of experience across consumer and commercial banking. He leads Checkout.com's UK commercial team, enabling business across sectors from fintech to e-commerce, deliver better customer experiences through faster and more reliable payments, global in-country acquiring, and deeper and more actionable data on payment flows. And then last but very much not least, we have Sarah Clarke, who's the head of UK for Clearco. Sarah was the first international employee of Clearco. Clearco is a Canadian unicorn that provides growth capital to e-commerce businesses. She heads up their UK business, and prior to Clearco, Sarah ran PayPal's business across Central and Eastern Europe, Middle East and Africa, amongst other things in her previous career. So welcome, Sarah, Moshe, Kaushalya. So Kaushalya, maybe I could start with you just to pick up on really what the future of payments might look like. So we've had the pandemic, and obviously we've just talked in the previous panel and with Ron's remarks around how technology has changed the way people react and changed the way, in this context, how people pay for goods and services. Do you think the rejection of cash will be permanent?
Hi, Priya, and thank you very much for London and Partners also for having us today. So delighted to be here. And in regards to your question, Priya, I think the pandemic has certainly accelerated the adoption of digital payments and commerce tools in every market that we operate in, including the UK. This has become true for businesses of all sizes. So anything ranging from even 2 employees all the way through to those that are tens or hundreds of employees, and driven mainly by the restrictions to in-person selling and shoppers wanting to limit essentially their social contact. So accepting digital forms of payments and others became pretty much essential part of the journey. And globally, we have seen existing and new sellers also transition from in-person sales to online commerce. And by sellers, I mean those merchants that use Square, typically. And for example, in 2020, over the first few months of lockdown, payment processing using the Square online store, which is our e-commerce builder, was up more than 5-fold after we launched new features like curbside pickup and local delivery. So that's just an example. And in the UK, we then saw a 15-fold increase in digital payments from January to April 2020, as well, one of the heights of the pandemic. Now, additionally, the pandemic has also prompted some people, I think many people actually, in fact, to shop small and shop local, especially while they were reconsidering their methods of payments in locations that may have previously been more cash heavy than perhaps the inner cities. I don't know how many of you have actually read our cash and pandemic report, but we found some really interesting and stark essentially statistics there. A few to highlight here. Of all the sellers that are currently taking online payments with Square in the UK, roughly 21% began doing so from March 2020 or later. And we also found that the share of Square sellers in the UK that went cashless, and by that I mean taking over 95% of their takings is not from cash, and that is between March and 2020 and March of this year. So over a 12-month period, also saw a rise of more than 4-fold, and over 50% are now accepting payments online as well. So these are some of the statistics that I can highlight. But again, just to sort of bring it all together, whilst we have been witnessing the decline in the use of cash for years, we must also remember that most of the recent change has been reactive and for health reasons. And that said, we should anticipate many will continue to operate in this omni-channel business model and to reach customers to make their sales in more places than ever before. But our belief certainly is that this will continue to be a bit of a balancing act between digital payments on one hand, likely renewed interest in paying for goods or services with cash as well, and especially as we continue to open post 19th of July. And so whilst we're seeing the decline is continuing, I don't think the recent decline in cash usage generally is going to be permanent. And again, we are seeing that being reported by a number of our industry partners as well. Very recently, I read that approximately 1/5 of the payments is still cash-based, despite the growth in payments volumes overall.
Thank you so much, Kaushalya. Sounds fascinating. And maybe at some point after our panel, you could put a link to that report you mentioned about cash in pandemic on the chat, because I think many of the audience will find that really interesting. And on the subject of the audience, I can see you've not been shy in the previous panels, so do dive in with questions and I will aim to pick those up as we go. So maybe Moshe, if I could turn to you and come back to this theme of e-commerce. So unsurprisingly, the pandemic's fueled the growth of e-commerce, but I was wanting to get a sense from you about how this change has fostered innovation in digital payments, and maybe in addition to that, what extent does that mean you have one innovation in one space that then feeds a development of innovation in another? Would love your perspective.
Thanks, Priya. Certainly, the pandemic has suddenly boosted online e-commerce, right? So we all know.
Moshe, we've got a slight bit of feedback, at least that's what I'm hearing. Assuming others are hearing that too. I don't know if there's an option to reset your audio 1 second. Let's try the headphones.
Is this better? Can you hear me now?
That is perfect, Moshe. Dive in.
Sorry, guys. No worries. Yeah, the pandemic suddenly has fueled kind of the growth in e-commerce, right? So last year, I think stuff increased by 50%. So in online sales and share of retail was like 19% pre-pandemic, like February last year, kind of. Now it's starting about 27%. I think even peaked about 36%. So you really seen an increase of 50% plus from the pandemic. So it's really exploded in that space. But I'm not sure I would say it's fostered innovation in digital payments. What I would say is maybe the reverse, and it's kind of what the point you were making, how innovation one space has fed the other. So I think payments have really been innovating for quite a while, right? There's been, you've had credit debit cards have been there, but PayPal, the digital wallets, Apple Pay, Google Pay, even Klarna and the buy now pay laters have been around well before the pandemic. But I think the pandemic has forced merchants, businesses to move online and then really start to adopt and and even become aware of some of these the innovations that have already been happening in the payment space. So conversely, what we're actually seeing in the digital payments is the digital payments fuel innovation in the other businesses, kind of to your point. So I think we've been innovating for a while, and now we've got kind of merchants coming in there, and they've come online, and number one, they're looking at where are the customers and how do they want to be served, right? And they've started to see that in the payment space. So if you even go pan-Europe, so we've got a lot of UK businesses, then they've gone online and they're looking to serve pan-Europe, and our neighbors are very close to us. They're 1 or 2 hours away, travel-wise, but the cultural behaviors to how people spend money and pay for things is really, really different. It's fascinating, and I think it's been eye-opening for a lot of businesses as they've kind of not only just moved online, but really kind of taken the opportunity to expand cross-border. So number one, those businesses are kind of taking the innovation that's there and looking to serve the customers where they are with the way they want to pay for things. And those things exist, but it's a matter of becoming aware and adopting them. Secondly, they're realizing that the customers, when they come to the checkout, they need a kind of a secure end-to-end experience. And you shop online, I think gone are the old days. We used to have like a hosted payment page. You'd shop online and it'd pop up some window, and it was all a little bit, all the branding and all the kind of experience which merchants had really spent a lot of money to achieve all the way through their journey has like disappeared. So you're seeing those disappear a lot more, and kind of businesses become aware, like, hang on, that's a really, it's not a great experience. So and also with some of the regulation coming on secure customer authentication, right? So businesses are kind of like, hey, what's that? What's aware? And they're realizing now we need solutions which kind of meet the regulatory needs, which can give the customers the trust in the payment process. And then thirdly, again, I think they're realizing it's not just a brand. They, businesses are putting a lot of money into their stock, the items, how they curate the page, but then it's also the fulfillment, the return thing. But if things fall over at the payment point, that's not a good position to be in the physical world. If you were in store and something fell over, you could go to the cash machine, you could come back, you could even have the old zip-zap machine or something like that. And at the end of the day, physically, I was tired, I was in the shop, like I need this item. If you're online and it falls over and and it's a soft decline or silly reason why it's been declined, you're just going to go to a different website. Right? You're just a click away as a consumer. It doesn't make a difference. There's no other option there. You can't go and do cash or a zip-zap machine. So you're just going to take your business elsewhere. So I think, again, the businesses are aware of it, and they're like, hey, what are the solutions that are out there? There are kind of innovative solutions there. And I think, we recently kind of did a report on retail payments, just released recently. I think about 97% of e-commerce CEOs across Europe are planning now to innovate their business models in the next 18 months. So I think I'm not going to take all the credit for that from the payments innovation that's happening, but I think as they've gone online and say, and tried to kind of line up all the parts of the business, I think they've been pleasantly surprised what's been in the payment space. And I think looking forward, we're continuing to innovate. So solutions like pay by links, which we now kind of offer, where businesses are incorporating that out into text messages. If you call up instead of doing it over the phone, you can text a link out and just pay immediately, or more so in social commerce and online selling. You have these live chats and channels and kind of presenting, but also then selling through those. So being able then to put links within the social media where the customers are, there's, I think the payments industry is really looking on the forefront on that and working with the front runners globally, and then they're bringing that innovation back home to the markets which are slightly further behind. So exciting space to be in. A lot of innovation has happened. I think the market's caught up with it, and there's more to come.
Thank you, Moshe. Fascinating, and do also add that report that you mentioned on retail payments into the chat, because I'm sure that will also be really of interest to the audience. Sarah, I wanted to turn to you, and Ron and Alan talked about it in the first session, didn't they, about the importance of supporting underrepresented founders, and this is something I know Clearco is really renowned for. I think if I'm right, Clearco's developed a model that in 2020 funded 8 times as many companies headed by female founders as the industry average. I'd love to hear a little bit more from you, Sarah, about how does this work, and how are you translating this into the results that you've seen there? Please tell us more.
Certainly. Well, I can't speak. Interestingly enough, it's not. We didn't set out to fund the underrepresented. It was more, we were looking to democratize access to financing. And I think, as a woman, I'm very heartened by the fact that we actually do support more women-founded businesses than your typical VC. But really, it's because our decision-making is meant to remove as much of the bias as is possible. So the way we allocate capital is e-commerce vendors who use Moshe's fabulous services, or the likes of Addy and PayPal and others. Although I also have to say, Moshe, I'm delighted that you use the zip-zap machine. I haven't thought about that in about 15 years. So that really, it brought a lovely memory back. But merchants connect up their various online payment processing accounts. So we then get visibility to their transaction history, which allows us, through the delights of AI and data manipulation, to kind of forecast what their business is likely to do with our support. And consequently, that is how we make our funding decisions. It isn't around personal connections, geographic proximity, et cetera. And as a consequence of that, we are funding more women-led businesses, more minority-led businesses. And here, particularly in the UK, 70% of our investments to date have been outside of London and the Southeast. So it is less dependent on having, did you go to Oxbridge with the VC partner who will hook you up with finance? This is really based on the performance of your business. And I think, again, as a woman, I'm heartened by the fact that this wasn't a pink washing exercise. We did not go out and try to knowingly support more women founders, but in fact, it shows that when they are given equal access to capital, they perform incredibly well. And I think, as I say, if this is a model that we can see espoused not only in our own space, but perhaps in others as well, it may start to address some of the issues that Ron raised on the first session as well, in terms of both encouraging more women to found businesses and enabling them to succeed when they do.
Thank you, Sarah. And that sounds like fantastic work that will hopefully sets a sort of beacon for the whole industry. I wanted to jump straight across to a question that Sonia Plaza has put in the chat, and I think it was in response to your remarks at the beginning, Kaushalya. So maybe address this question directly to you, but please others do chip in. Sonia rightly says that it's fine for us to switch to online payments for people who are documented and have the ability to have access to those sorts of resources like credit cards or debit cards. But what about customers that are undocumented, so they won't have IDs or be able to pass money laundering checks? Can you comment on that?
Yeah, no, that's 100%. I think when I look at our seller base, one of the things that we did was to actually really support them right from the beginning of the pandemic. When we realized actually a lot of our sellers were struggling to actually continue to sort of be in the card present or like an in-person shopping environment, and then really helping them through our products and suite of offerings that we were starting to develop as well, and those that were already available as well, and just making sure that they are essentially brought up to speed with what is available to them. So yeah, no, 100% agree that it has been a journey. It's not something that for some people it's taken maybe a little bit longer to get their online setup, etc. But Square as a company has been part of the journey, because obviously we always put customer at the center of everything. So our support teams have been really the first, I would say, maybe even 3 months to 6 months. A lot of the focus was about really getting to the core of what was needed, how we can individually support some of our sellers, and really looking at the pain points and just addressing them through either new product solutions or existing ones in a broader scalable fashion.
Thank you so much, Kaushalya. I'm going to direct a question maybe at both Moshe and Sarah, if you don't mind, which is just to sort of flip this and look at this from the perspective of the consumer. What would you see as the biggest sort of change that a consumer might expect to see in this space of digital payments or e-commerce? I don't know who wants to go first. Sarah, ladies first.
Thanks, Moshe. Well, I think what I'm expecting to see is a continuation of some of the trends that Moshe highlighted in when he answered your question earlier. I can harken back to my days when I was at PayPal, and really, when you think back to the last 5-6 years, one of the biggest drivers of change in payments was not actually driven so much by a payments company, but actually by the likes of Uber, which is the whole concept of the embedded and invisible payment. And that really, I would argue, changed the game in terms of what consumers' expectation was around frictionless payments. And I think we're going to continue to see that trend across multiple channels and verticals, where consumers are expecting, and Moshe talked about this, it's no longer the superimposed, interstitial, and it's interesting to see how that sits alongside some of the regulatory changes around PSD2 and two-factor authentication, et cetera. But I think the consumer expectation around truly frictionless payments is only going to continue and accelerate. As I used to have to explain to people at PayPal and at Barclaycard, where Moshe and I both used to work, consumers are not excited about payments. They fundamentally aren't. They don't care about how they pay for the good. They want the good, right? When you're buying a house, you don't care about the mortgage, you want the house. So really, I think that the smoother that transaction flow can become, obviously, the more optimal it is, both for the consumer and for the merchant, to Moshe's point around cart abandonment, which is e-commerce merchants' single largest issue is cart abandonment. So,
Moshe?
Well, it's well, I've got to go think of something new. So no, all of that is it's true. This is the immediate time, right? It's all the stuff, the links being where the consumers are. It's always being hidden payments, right? I'm a sado. I talk about payments. No one cares, right? Sarah said, right? I'm no fun at parties. And it's about embedding them and hiding them. So as a consumer, you just interact with something and the money goes. Obviously, there's a risk. You need to balance that. There needs to be a little bit of friction so people don't overspend. But we've talked about this for some time, and as I said, I think the payments industry has been innovating for a while, and we're a little bit ahead. So if you ask me what's beyond that, right? What is beyond these things? Because I'm going to go with central bank digital currencies, the CBDCs, right? So if we think beyond all, at the moment we're innovating with kind of tools we have today, and there's, you know, embedding it and hiding it and being where consumers are. Central bank digital currencies are really, really interesting. We're a few years away yet, but we know the central banks, kind of all of them around the world, are now kind of playing around with them. And I think when you have those means of exchange, there's always questions of what does that mean for Visa and MasterCard? Because you don't need a third party sitting in the middle, right? The funds can go there. But I think you're going to need different types of I guess services within the payments industry, right? You know, maybe checkout.com won't serve, you know, serve a merchant the same way because it's not processing card payments, but it might need to capture those funds. It might need to, you know, be able to track and reconcile against it, and be able to, you know, if they need to refund the merchant, all these kind of things. So I think it's a really interesting kind of innovation that's going to be coming in, maybe for more like the 5 to 10 year horizon. But I think that will probably be the next super disruptive thing, you know, beyond, you know, taking optimizing payments we have today to like the zenith that I think we're doing that. But then the world changes and it goes upside down again, and I get to keep my job. So that's cool.
Fantastic. Well, I'm afraid we're going to have to bring this conversation to a close here and move on to the next panel. But thank you so much, Kaushalya, Moshe, and Sarah, for all your thoughts.
Thank you all. Really insightful discussion. I know we could have gone for a lot longer, but great to hear about the consumer habits, growth of e-commerce, and all the great work you're all doing. And thank you also for sharing those recent reports. That's fantastic. So it's just a pleasure now to hand over to Amy French, head of Level 39, to introduce our final panel on green finance. Over to you, Amy.
Thank you so much, Karen, and thank you to London and Partners for having us as well. So the topic of this panel is pretty timely given the COP26 coming up in November. I also read recently that London remains one of the world's leading green finance centres, closely behind Amsterdam and Zurich. So really looking forward to kind of touching on how London has enabled the growth of green finance. Reminder, if you do ask any questions, please do put them in the chat and I'll make sure that we come to them. But can I please welcome our panelists to the virtual stage, please? Wonderful. Wonderful. Welcome all. Thank you so much for joining. So I'm going to actually hand over to each of you to briefly introduce yourselves, and then we'll jump into the questions. So Duncan, could we start with you, please?
Hi, Amy and everyone. So I'm the CEO and founder of Climate Invest, which is a smartphone app that allows anybody to invest into companies that are having a positive impact on climate change. And just a couple words on me. So I've spent the last 18 years in sustainability, built and invested into a range of different clean tech companies, and basically have built Climate to sort of allow anybody to do similar into a curated portfolio of companies that are making a difference on climate change.
Fantastic. Thanks, Duncan. And Dan?
Hi, everyone. So I'm Dan Saunders. I'm founder and CEO of Zeti. We're a fintech that's revolutionizing the financing of transport, very much focused on clean and connected transport. And we're doing this by using real-time data to enable pay-as-you-use services for both vehicle fleets and infrastructure. My background is in technology and finance, and just basically a promoter of innovation and entrepreneurship.
Perfect. And finally, George.
Hey, great to be here during FinTech Week London. Thank you. I'm part of the partner business in Microsoft UK, specifically focused on financial services and FinTech. So I'm the FinTech UK lead, and also a big advocate for sustainability for our partner ecosystem broadly. So yeah, thank you for having me.
Wonderful. Well, thank you all for being here as well. So let's get straight into the questions. So Duncan, I'm going to come to you first. How has sustainability and ESG impacted the London fintech scene? And do you see a specific impact going forward?
Yeah, absolutely. So it's a bit of a truism. I think there's just been an absolutely massive interest in sustainability, kind of broadly defined in the last few years, with Greta and David Attenborough, others are raising the profile of climate change, and then COVID. I think kind of the silver lining of COVID, which has been, you know, dreadful for so many people, is that it has made us all think about how we're living, and are we living in a sustainable way? You know, so I think a lot more people are thinking about how they eat, how they clothe themselves, how they move around their homes. Maybe they should make them a bit more energy efficient, and all these great sort of little kind of behavioral changes. And then investing as well. We think that there's a real part to play in terms of green investing. So there's been a massive sea change. I think the zeitgeist is very much for sustainability, and that clearly there's been a knock-on effect in terms of fintech. You're seeing some newer startups pop up, trying to have an impact, building platforms, be it B2C or B2B, to try and make a difference. And then if you look at the sort of bigger asset managers, billions, hundreds of billions of pounds have been moving into ESG funds, and we can debate for hours, ESG, the sort of definitions of ESG. We're a little skeptical of what ESG really does, but broadly, a lot more people are very interested in sustainability. Little shout out, we're just closing a crowdfunding round on Crowdcube, and we have had tremendous interest in what we're doing from lots of people, which is a great sign. And then another point I'd make is talent. There are great companies out there, looking at Dan as well, with great missions that are trying to make a difference on climate change. And I think it's got a lot easier to recruit really good people when you've got perhaps the biggest mission of all, which is trying to make a difference on climate change.
Brilliant, thank you, and great news about your crowdfunding campaign as well. I hope it goes really well. George, coming to you. So what role does technology play in sustainability and green finance? And perhaps touching on the kind of pandemic part, have you seen kind of an accelerated change over the last kind of 16 months?
Yeah, it's a good question. I think, well, technology is very much the lens with which we view the sustainability challenge of Microsoft, but I think importantly, the power of data in tackling it. So we really can't manage what we cannot measure. So data unlocks that potential for us to start to understand, how do we reach net zero, transition to a low carbon economy, and move beyond this kind of culture of pledging into more kind of concrete action. So, and that includes how we think about adapting to climate change, importantly as well. So yeah, research shows us that technology can have a significant difference on reducing emissions. But even if you look at just artificial intelligence on its own across 3 sectors, so in agriculture, transport and energy, is forecasted to reduce emissions 4% by 2030. And of course, it's playing a vital role in green finance solutions, underpinning those as well. So the power of these types of technologies is why we've dedicated some investments and some programs into trying to really accelerate this sharing of climate and biodiversity data. One of those puts cloud and AI tools into the hands of those who are really working to solve environmental challenges, both in the public and the private sector. So it's enabling organizations to collect and analyze data at massive scale. One of those partners is a business called Teradata. So they're using technology to help model financial climate risk at a kind of hyper local level. So particularly focusing on wildfire risk. So they've got this wonderful physics-based machine learning model for insurance companies and governments. And it starts to help them to understand their risk to heat-related events. And more London-centric, we're also working with Savest, who I'm sure some of you know, who are shining a light for businesses and financial institutions in a similar way on the exposure to the risks of a changing climate with their data platform. And we know this is becoming a more mandated disclosure for UK companies soon as well. So I think this kind of financial preparedness for heat waves more broadly is an area that we'll see much more investment in over the next few years. There's also many examples of where intelligent sensor technology is being coupled with AI and cloud infrastructure to try and drive some green finance initiatives. There was one I really liked the other day. I read Swiss Re are collaborating with some farming institutions in Kenya, where instead of paying out as a result of loss of livestock due to extreme weather events and poor climate, and therefore insurance claims, they're actually using sensors to monitor the vegetation, the quality of it, and then wiring money over to farmers ahead of time if they're noticing critical issues. That was a wonderful way of sort of flipping the value exchange of that model around. It's something that really kind of benefits everybody. But it's very much the openness and the sharing of climatic data across public and private sectors that I think is is really most important. So we've also launched something called a planetary computer. So this gives open access to various satellite and land mass data feeds so that fintechs and organizations can start to build solutions on top of it. One of those partners is a business called Carbon Plan. So they're using technology to improve the scientific integrity of the carbon removal market. So when we're thinking about financing projects and nature-based solutions, try and remove carbon as well, it's looking at the sort of scientific validity of those. So I think it's really important because I can see that progressing into other reviews of financial instruments. So for example, the performance of green bonds that we launched. And then from a London perspective, you've also got businesses and startups like Earthly, who are doing something very similar to trying to help businesses to invest in high quality environmental protection projects and accelerating that journey to becoming climate positive. But I'll leave it there. But yeah, the technology plays a significant role, I think, in this journey.
Great, thank you, George. I do actually have a quick question for kind of each of you, if you have some kind of examples as well, and then I do have a question for Dan as well, more directly. But you know, talking about that kind of collective approach to, you know, reaching net zero and sustainability generally, do any of you have any examples of how kind of government or industry initiatives have supported the development of green finance in London that you're happy to share?
Well, it's similar to, I think, what Duncan was saying earlier on about how trying to move beyond ESG, because ESG is very, very risk-centric, looking at kind of the economic risk for organizations rather than necessarily their carbon intensity or the progress they're making around helping to transition to net zero. So I really love what the Stock Exchange have done with their green economy mark. But they're trying to really focus in on organizations who generate at least 50% or more of their revenues from green activities. I think there's, over 95 companies in that at the moment, but that's really starting to sort of narrow down, I think, some of the organizations that are making a real difference.
Well, we need to give Dan the microphone, but just very quickly, an example I give is the government just announced that they're going to be launching some green bonds, which will go directly into renewables, which I think should be, at least if we believe what they've announced, should be sort of user-friendly, retail-friendly. There's not much detail, but that could be tremendous. You're putting sort of billions of pounds to work into infrastructure that's going to make a difference on climate change. So we imagine that will be sort of solar and wind, and that would be a sort of a fantastic government initiative, which kind of feeds down into the retail investor.
If I could just add, sorry, just quickly, no, all I was going to say is I actually think the government deserve a lot of credit actually for what they did, 10 years ago with the whole, bringing in tax efficiency for solar and wind. And I know an awful lot of money did flow into that market very quickly, and maybe it wasn't all managed to the extent that it needed or wanted to be managed. But what it did do was it catalyzed the market. And you look at the renewables sector now, and you see what's happening both in the UK and globally. And I think that shows just how powerful government intervention, particularly at the beginning of a new industry, can be, and how much it can accelerate that market. And we're all better off for it.
And staying with you, Dan, let's talk about some kind of trends in London. What are you seeing in the kind of green finance space?
Yeah, so I think we've, touching on what Duncan and George said, we've all seen the demand, both from institutions and from consumers, for whether we call it ESG, whether we call it sustainability, but there is a demand for sustainable investments. Consumers want to put their money into sustainable opportunities. Institutions want to do the same. What we are clearly seeing, and London's a brilliant hub for fintech, is using technology to reduce friction so that that money can be raised efficiently and deployed efficiently using fintech. And then it's a case of taking that technology and making sure that the opportunities being financed are sustainable opportunities. So I'm going to use Zeti as an example now. We're using real-time data to finance assets. So we're very much focused on transport assets, fleets of vehicles. Now we could be financing diesel or petrol vehicles with the capital that we're getting from financial institutions, but that's not the purpose of what we're doing. We're very much focused on zero and ultra low emission vehicles that we can capture the data of. We know how many tons of CO2 and how many tons of NOx are being saved by that switch. So I think there's more and more businesses that are developing technology, and then once that technology is developed, focusing it on basically opportunities, on asset classes, on infrastructure that do good. You know, Duncan and Climate are doing just that. And I guess then the only other point that I've seen a lot in London, and frankly, as a startup, as a young startup, we're only 14 months old, and I'm very appreciative of, is that sustainability as a goal for a business to help sustainability, that attracts talent. And as a startup, you can't always afford to pay, you know, the best salaries. But if you've got the right mission and what you're doing is good, people believe in it and they come to the table and they deliver. And that makes such a difference if you're starting a business and looking to scale it. And that's one of the things that we've really found about London, because it's a hub of talent, and it makes such a difference if you can attract that talent.
Brilliant. And if you had a crystal ball, what do you think green finance will look like in, I don't know, 5 years' time?
Oh, God. That's a nice, easy question. I think it's going to be a case of, again, reducing friction. I think there'll be more and more money flowing in from consumers and from institutions. I think we're getting past this point of ESG investments being an alternative asset class. It's going to become it's going to become a mainstay asset class. It's going to be, there's no reason why an investment can't be sustainable. And again, it's about technology reducing that friction. So whether it be in using Climate's app to get money out of individuals as consumers and then invest in opportunities, or whether it's Zeti or Microsoft bringing other money or other technologies to the table, I just think sustainability is just going to be embedded in everything. It might not be in 5 years, it will definitely be in 10 years.
Yeah, I would echo that. And I'd also add, I think historically, sort of green investing has been seen as a little bit like charity, like you're going to get a subpar return under market benchmarks. And actually what we've seen is that you can get a better return by putting your money into companies and projects that are doing the right thing. And it's kind of obvious, because this is the future. So if you're putting your money into companies that are doing the right thing and their products are growing because consumers are moving towards them, then it seems likely that those companies will do well as investments for you as well as a consumer. So I think the zeitgeist is really dramatically changed in the last 12 months, and people understand that they can not only make an impact, but they can also get a good return on their investment. I think that will just become very mainstream in the next 5 years, that appreciation, and in fact the necessity to move your money into this stuff, because the stuff that isn't doing the right thing is going to go the opposite direction. You know, without even getting sort of oil and gas kind of at the one end, but companies that are just not very energy efficient are not doing the right thing in terms of, you know, governance and other social aspects. They're just not going to be the winners. And there's all sorts of research that if you are, you know, doing the right thing as a company and your product is doing the right thing, you're going to do better. So I think it's just going to become the norm in the next 5 years.
And George, did you want to add to that?
Yeah, just to add on to that point ever so slightly, it's more of a hope, I think. Thinking about the pension side is our most powerful investment vehicle as individuals. I really like to see more UK pension options that are aligned to either kind of net zero funds or specifically science-based targets for those funds. And the main focus is really around the auto enrollment of those default pensions. You know, you're going to start a new job, they automatically enroll you somewhere. I think having more choice on those that is more sustainability led is really important over the next decade.
Fantastic, thank you. And I realize somehow we've already gone through 20 minutes of time. I don't know where that time's gone, but that's been incredible. I'm sure people will connect to you following this anyway. But thank you, Duncan, George, Dan. And I guess now we hand back to Karen to finish off the afternoon. Thank you so much.
Thank you. Thanks, Amy. Thanks, everyone. Honestly, thanks for sharing your experiences and insights. We could talk about sustainability for days, but it's been fascinating. Thanks so much, all. Before we finish, can I ask everyone to please complete a poll? My colleague is gonna drop that any second. There you go. If you could all please complete that would be fantastic. It's really important for us because it allows us to kind of make sure that we're bringing the right content and quality of these events that not just in the next few weeks, but the next few months too. So I'm just going to give you a bit of time. If you could scroll down It'd be fantastic if you could complete that. Thank you. I can see everyone filling it up. It's brilliant. Thank you. I just need to give it a bit more, just a little bit longer. Okay, I think we'll stop that there. Thanks everyone so much for filling that in. And our next FinTech Club event will be taking place in October, so please keep an eye out for those details once finalised. These events will be taking place every 3 months. And we're also really excited for London Tech Week, which is taking place from the 20th to 24th of September. There'll be lots of different sector events taking place that week, so keep an eye out. And we will put that link in our follow-up, which you will get a follow-up email and maybe our chat now, should you wish to sign up. And just as is tradition on these events, we love to take a quick picture of you all. So can I please ask that you all turn your cameras on, and one of the team will take a picture. Emanuela, I'll leave that with you to let me know when you're ready to take it, and maybe remove me from the spotlight. That would be awesome.
Awesome.
Brilliant.
There we go. Yeah, ready to take the picture. Shall we wave?
You just let us know when you're ready.
Oh,
can we all wave? Everyone wave. Thank you. Good?
Yeah. Okay.
Brilliant. Thank you. Thanks, everyone. I really appreciate it. So that just leaves me to thank all of our speakers today. Thank you so much for your brilliant contributions, and thanks to all of our participants for being so engaged. And finally, a big thank you to the team for all your hard work. We'll also be sending a follow-up to this event with contact details of our programs, should any of you need support. And I think you would have seen the contact details on the screen too. So thanks, everybody. Fantastic event, and we look forward to seeing you next time. Enjoy the rest of your day and evening. Thank you, everyone. Bye.